Okay, welcome to our webinar today. We've got a couple of great topics. We wanted to talk about this year's Red Hat Summit 2024, and it's no great surprise that AI was all the buzz. So, the first session, really, Matt Hicks kind of nailed it in introducing a whole bunch of new great products with AI in it. Let's talk about what does this actually mean for the financial services industry. So, can you talk about the challenges of AI in the financial services sector and what needs to be overcome here?
Sure. This is Jim Bennett. I think we'll break it down to the basic principle. The first one is accessing the data to do your AI, right? And the great thing about Red Hat is we have OpenShift, and that allows us to penetrate that data source to be able to uh, have a better AI predictive modeling as we go forward, and helping that environment as we expand with partners. The second thing is the machine learning associated with that. We have partners that can help speed up the machine learning and provide that more output that the AI applications need. And the third, I would say, is that it allows us, because of our open source community, to work with many AI partners out there. Everybody has these different applications that can provide the output that the customers are looking for. So I think Red Hat's in a very unique position to within the tech stack to help facilitate the usage of AI.
If I can build upon that. So if I put my CTO hat on, I think one of the challenges that's happening inside the banks is banks have been trying for years to improve the data quality of what they have. They have a lot of silos between, say, investment banking, commercial banking, corporate banking, wealth management, and cards. How do they get a wholesome picture of all of this? How do they improve the data quality? How do they improve the lineage? Because if you're starting to train models, you want as much data as possible from the different divisions, as well as across geos. And the geo aspect is challenging because of data sovereignty rules. So how can they apply different techniques, whether it's data masking, anonymization, synthetic data,
Mhm.
what have you, to get to better models? And I think that's a challenging area for the banking industry.
Yeah, and if I can pick up on that, Eric, Monica Sasso here as well, I should say. I think, Eric, you said data sovereignty rules, and I think that the challenge I'm going to talk about is also an opportunity, and that is around regulation. But I think this is where open source really can shine. Open source and flexibility and choice, obviously, that it gives, it brings trust. And trust makes it much easier to respond to these regulations, whether that be data sovereignty, whether that be resilience, or whatever. We've got something in the EU in the pipes called the EU AI Act. Also, the US and the UK have just signed an AI safety agreement. And so having transparency and open source models is really going to be the answer to some of these laws with at the risk of giving legal advice, which I would never give because I'm not licensed to. But these are all things that will help firms try to solve some of these problems as they're unpicking some of their existing models and trying to organize their data to both my colleague Eric's and Jim's points around they've already got lots of data. Now it's time to actually kind of get it organized and sort it out so they can start to democratize it and use it, dare I say, in anger.
Yeah, and that's going to help. That open source model is going to help de-risk as well because you improve the explainability, you improve the auditability of all these things. And in addition, I would argue a lot of the innovation in the AI space is happening in the open source.
Yep.
So by basing your solution on top of open source, you're gaining velocity, you're getting access to new methodologies, new tools, and that'll hopefully help you, benefit your customers more quickly.
Great. So let's talk about two areas that look like they're ripe for transformation with AI. One of them being customer service, and the other one being operational efficiencies. So, can anyone comment on those two?
I'll jump in. So, from a customer's experience point of view, I think one of the most common use cases I'm hearing from customers is the ability to take the information they have in the firm. So, they can take, for example, an off the shelf LLM, large language model, and add to that. So, whether you're fine tuning or using a technology called RAG, retrieval augmented generation, but adding your intellectual property as a bank. What is your point of view about where interest rates are going? How was your approach to how you solve for this? What sort of products you have and things like that. As you layer it in, you can start presenting things to customers in a more automated way, either directly to the customers or alternatively to relationship managers or customer service agents. Instead of having them search across lots and lots of different systems to get an answer for a customer, very easily in a single chatbot user interface, they can ask a question. The system behind the scenes knows where to go for it, knows English, knows how to craft an answer, and it becomes a more efficient way to solve these customer problems. And I think the second part of your question was really operational efficiency. How do we get and make people more effective, more productive has always been the mantra for, computers. That's how economies improve is better efficiency, better productivity. There was an interesting study done by Harvard and BCG looking at if they took new analysts and gave them AI, how much more effective were they? And they saw that across about 700 different analysts, they were 25% quicker to give answers in these model questions. But importantly, if they looked at it for the bottom performers versus the top performers, the bottom performers were 43% better at answers than they were before. So you're improving everybody and also lifting up and kind of mentoring the more junior people to a higher quality. And I find that super interesting.
Wow, yeah. You might actually have to send that to me, Eric, so I can read that. That's quite interesting. I think, if I may remember back to the actual keynote, there was a demo on stage. There was four of our colleagues on stage, and they were doing a demo using InstructLab about an insurance claim or an insurance company, and it was essentially kind of simulating like a call center where people were kind of wanting to update the bots and the services exactly as Eric was just describing. And I think that really crystallized it all for me, right? It showed customer experience improving as well as operational efficiencies. And it showcased how InstructLab democratizes AI and it puts it into the hands of the people who know their customers or their clients' challenges the best and the most intimately and can fix them without having to raise a ticket, find a data scientist, wait for the data to be exposed, and wait for compute time. So it kind of answers those things in one. And I really think that tools like InstructLab give unprecedented access not only to the teams, but also to the wider financial services ecosystems of partners, ISVs or independent software vendors, and even SIs to come up with new and different solutions that are open and transparent and accessible. And I think, at the end of the day, right, I know the three of us have had this conversation millions of times. If we can bring the cost of transacting down and remove friction at any point in the process, happy days, everybody wins.
I wouldn't mind adding two things on there. I was on a call earlier about customer care, which is a new reg in the UK, which is on corporate banking retail customers about making sure that the relationship between the institution and the customers is in the best interest of not only the financial institution, but the customers themselves. So what you have with AI is you should be able to extract and inform the customer of events that are coming up that might impact them, or there's some issues that might occur that they need to be dealt with. So it's a more friendly or more interactive banking relationship. So there's this push from the regulatory bodies in the UK. I can't speak from other authorities about doing the right thing for the customer as you go forward, right? The second thing, kind of going back to what Eric highlighted, I'm working with an ISV, but we have these institutions have very what I would call high performing data scientists and PhDs, and a lot of them are spending time on getting the numbers, crunching the analysis to try to do the output. But with where we're going within Red Hat, we can reduce that time working with partners so that the value add that they're working on is really the output versus the input as you go forward. So there's a different what I call aspect of cost savings, but you become more efficient with these high investment individuals that you have in these firms to focus more on the value add side of the spectrum versus just trying to get the data and analyze that data. Yeah.
Great. Those are some really great ideas. For now, how about looking into the future? I mean, AI and beyond, what do we foresee in the financial services industry as future trends?
I think I would build upon something that Monica said before is the idea that how do you impart your own intelligence as a firm into the models? So there's been a lot of work done. It's been kind of amazing. It's kind of like Moore's law of LLMs, how the model's getting larger and larger and larger. GPT-4 there's 1.7 trillion parameters. It's insane. These models take a long time to train. They consume a tremendous amount of electricity and power. But an area that people are looking into is, what if we had smaller models, but were domain specific? So you have a model that's specific for healthcare, specific for banking, or what have you. And Bloomberg created their own model. A lot less investment went into it than, say, OpenAI with GPT-4, but they trained it just on financial data. And they measured it, and it was more effective in answering questions about financial services, but with a smaller model. So you can imagine more different types of models. There won't be maybe an Uber model that satisfies all your questions, but ones that are specific. Maybe it's credit cards, maybe it's banking, maybe it's wealth management. These models can be then trained more quickly. They can be fine-tuned more consistently with your own data. And I think that's an area that I find very interesting.
To add to that, what we're doing is we're working with a couple SIs that have large data centers, and they're looking at, and it's not them, it's across the board on how to make their data centers more effective to provide the compute at the speed that's necessary as we go forward, right? So that's a new, I think, feature as we go forward. And then, of course, the other thing we should be considering is, the amount of energy that these activities are going to generate. What is it? What we need to do with ESG as we go forward, right? And help these institutions. So we're working with quite a few strategists and consultants that are trying to work with the C levels on, how do they measure these ESGs? How do they increase productions while driving down costs and energy usage? I think that question is going to introduce more innovation and new activities in the future.
And optionality, I would say, because you want to choose the right tool for the right thing. So there may be a certain GPU that's great for training.
Yep.
But based on the model you have, maybe you can use a CPU with matrix math extensions for the inference. Or maybe you need GPU, maybe it's, NVIDIA, maybe it's Intel, maybe it's somebody else. I think you want to preserve that optionality, because as Gen AI becomes more and more prevalent inside your firm, your CFO is going to be asking questions. Well, this is great. People love it, but look at the bill. So how do I do this more effectively and efficiently?
And to your point, is there an ROI off the back of it? Right. Yeah. So it's, again, we've all had this conversation probably ad nauseum. It's about the right tool for the right job at the right time. So it's absolutely having right. The ability to run the right workload in the right location at the right time brackets of day is absolutely going to be key. And I think if I could round this out with my future forward looking, and again, anybody who knows me or works with me, you guys are probably going to have guessed what I'm going to say. But I think as we moved into this, democratization of AI bit, we need to make sure that everybody, including ourselves, is reskilled appropriately. And I loved how Matt Hicks said it, when he was on stage and he was talking about it's about skills and knowledge. And I think that's a really neat way for us to think about how we all need to enhance our own knowledge and skills as we move into the AI era, so that we can capitalize on it and there is an ROI for it.
Fantastic. Well, let's leave it right there. I want to thank our experts for sharing their ideas and their insights, and thank you all for joining us today.